Hey Puppy Trades, wanted to do a video update on a stock called Fastly. Fastly is in the software sector, which is statistically showing a lot of relative strength in the market right now. The software sector, the solar sector, the home builder sector, these sectors are showing relative strength. So we want to be buying these stocks, all right? Now, Fastly just had a, $60 drop in 10 days or less. So when people say stocks fall faster than they rise, that's what they're talking about. Okay, stocks fall faster than they rise. But what does this mean, right? A correction this quick could be potentially, if you're an Elliott wave theorist, a massive amount of fuel to the upside, okay? These corrections in Elliott wave theory, the next price target comes from the Fibonacci retracements, the 61.8, the 161.8, the 200% retracement of these corrections. Okay? So when you're taking a correction like this, the bigger it is, the further out is the next price target. All right? So this correction being so quick could be, if you're an Elliott wave theorist, something that is giving a lot of fuel for a move to the upside, right? You would call this a wave one, then a wave two, all right? And this wave two being this deep and this quick would give you, a very good expectation that the wave three is going to be massive, and then the wave four and the wave five as well, okay? And that's just with Elliott wave theory, but I don't even want to talk about Elliott wave theory today because I don't need to. All right, Elliott wave theory, some say a good introduction is to light your money on fire. I don't think it's all that true, but if you don't follow the rules, there's a lot of better ways to make money consistently in the stock market, okay? And the most consistent way is the bull flag pattern, okay? A bull flag pattern is when a stock goes on a run and then consolidates sideways with declining volume, confirming bullish consolidation. Then a breakout in volume gives you a timing signal that the consolidation period is over and the volatility is going to pick up again, okay? So this is a very bad time to be selling options on Fastly because we just ended a long consolidation period and volatility is getting wild, right? That's how you get the fuel for these moves higher, okay? So this stock goes on a run. It consolidates sideways with declining volume, confirming bullish consolidation. This run is 3 months. So when we put it at the low of 71, right here, this is the low of 71, the time target is 3 months. Okay? We're going to say that the time target for Fastly is going to be the equal legs target, and we're going to say it's going to be 3 months from this low. Okay? So the time target that I'm projecting is that Fastly will reach the equal legs target in 3 months. The equal legs target is 164, okay? 3 months from now is January 24th. Okay? But that's the more conservative time target because really you could be placing it from this low. Okay, which would mean that Fastly hits it 3 months from mid-September, which means we could have Fastly at 164 around Christmas. Okay? Bottom line, I think Fastly because it went on a bull flag run, consolidated sideways with declining volume, and is breaking out of this bull flag. And we'll get to the killer bees in a second. I'll talk about the killer bees. But it's broken out of this bull flag, and now it's back testing this bull flag. I think this is a very good buying opportunity personally. Okay? For any type of swing trade. And here's the risk management aspect that I will be employing. The low right here is going to act as the stop loss, okay? So if Fastly closes below 71.39, I'm exiting my swing trade. Okay? If Fastly doesn't, my expectation is that it formed a bull flag, consolidated, reached the median of this pitchfork, and back tested it. Okay, we'll talk about the pitchfork more in a second. But I believe this is a bull flag breakout and back test. Okay? So bull flag, breakout. Oh, yay, I'm a Fastly bull. No, you're not. Okay? This is called the back test. This is the last step in a bull flag. It doesn't always happen. Okay? But when it does happen, it can be a very good opportunity because you have so much confirmation, all right? You had this bull flag, you had the declining volume, you had the breakout, you had the back test, and now we have a Andrews pitchfork, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 reactions, okay? So we have a valid pitchfork. We have a bull flag that consolidated sideways with declining volume, confirming bullish consolidation. And we have broken out, tagged the median of this pitchfork, right? This is why when I say the median acts as a magnet in resistance, this is exactly what I mean. The median acts as a magnet in resistance, okay? But this also gives us a lot of validation that this pitchfork is accurate. So now that we've gone and done what if you were a classical TA, the classical trading, you would say this is a back test of a bull flag, and you would be expecting 164 to be reached. Okay, so here's the projection. Fastly has formed an Andrews pitchfork that is proven to be valid. It formed a bull flag and consolidated sideways with declining volume, confirming bullish consolidation. A selling climax and a volume spike has given us a timing signal that the consolidation period is over, and the expectation is that conservatively in the next 3 months, I personally believe it could happen in the next 2 months. We're going to say 3 months for now. Fastly will reach the bull flag equal legs target of 164, my apologies, and head back to the median of this pitchfork, okay? So the target is 164, and the median of this pitchfork, the stop loss that I will be using is 71.39 on a daily close.